Well, frontline debt agencies say they're being stretched to the limit by middle-class people now in financial dire straits. The Financial Service Community Money Advice claims the number of professional workers and homeowners seeking advice has soared by as much as 85%. Well, joining us now in the studio is a coordinator of the UK Insolvency Helpline, Richard Sorsky. Richard, good morning to you.
Good morning.
You're sort of National Money Advice coordinator, if I can put it that way.
That's right.
And what's the picture you're getting? Because, I mean, insolvency is the worst end of things. I mean, is it just that people are feeling the pinch, or are they really hitting the buffers?
Well, the UK Insolvency Helpline deal with probably about, let's say, 100,000 cases of debt a month.
A month?
Yeah, absolutely, absolutely.
Good grief.
And people are coming to us being referred from advice bureaus, law centres. We deal with quite a lot of big blue chip companies who refer their staff to us. And what we're finding
you've gone through their sort of personnel or
that's
HR
right.
departments.
There's things called an employee assistance providing service, and we sort of run most of those services for them. And what we're finding is people come to us. The average person that we deal with, because we're dealing with employed people, it is usually around £50,000. Generally people come to us with mortgage problems, credit card debts.
Well, I was going to ask, I mean, is this really just chickens coming home to roost? Is it people's own thoughtful living beyond their means? Or are we now seeing, in terms of, you know, the mortgage rates going up, food costs going up, petrol costs going up, that people just cannot afford to live in modern day Britain?
Absolutely. I think the consumers are impatient these days. They see something, they want to buy it. They become dissatisfied with their lifestyles, and they almost feel that not having credit is being financially naive. So they see a car, they want to buy it. They see a kitchen, they're happy to go and get a secured loan, a homeowner loan to buy it. And then, of course, an unforeseen event happens, such as they don't get their bonus, they get divorced, or a child comes unexpectedly, and before they know it, they can't budget for those things.
What about the financial services industry itself? I mean, there was a story in the papers about Barclaycard this week offering people cash advances on the credit card, you know,
Yeah.
29.2% APR.
Absolutely.
I mean, is that usury?
It's a typical trait of the profit-making sector. You know, what came first, the lender or the spender? They're trying to entice people to buy their financial products, but on the other hand, can people afford them? Is it the right thing to do? And we've got to ask the public, and the public have got to judge for themselves. Can they afford to take this credit out?
Yeah, and in terms of, you know, you describe those people with families,
Yes.
and cost of clothing and feeding and so on.
Yeah.
I mean, is it that particularly with property, we have priced ourselves out of modern living?
I believe so. I think in the last 5 or 10 years there's been a wave of liquidity that's come through the marketplace. House prices have gone up. People haven't really cared they've gone up because there's been so much money available. Financial advisors are quite happy to search the market and find secured lenders and remortgage products to get. And as long as people can afford them, they're happy. But the problem we're finding is that there's about 1 million fixed rate mortgages coming to an end every month.
Yeah, and we're being told that in terms of
refinance,
when they are being refinanced, we're talking about £200, £300, £400, £500 more a month.
Absolutely,
which is going to wipe out some families' budgets.
Exactly right, and we're talking about doctors, we're talking about accountants, financial advisors, middle-class families who have got a general household income of around £50,000 to £70,000. It's not lower-income households anymore.
So you're not well off in modern day Britain, even with an income of 40, 50, 60, 70,000 pounds.
Not if you're keeping up with the Joneses, buying new cars, going on holidays, having your kids at private school, using private doctor services, going to designer boutiques. Absolutely, you're not safe. You've got to budget, and that's what we do at the UK Insolvency Helpline. We teach people how to budget. The average person come to us in debt. We will analyse their problem. We'll choose something for them. Either it'll be maybe an individual voluntary arrangement, which we're the main place in the country that do those at the moment. Yeah. Bankruptcy is a last resort.
But I mean, very quickly, Richard, I mean, the result of drawing those horns in is if people are not spending, it's going to affect the economy.
It is going to affect the economy, but I think the economy is being affected as we talk. There's been quite a lot of, we deal quite a lot of city banks, and we've had a huge amount of calls from people that have been made redundant, especially from the Bear Stearns incident. We've had quite a lot of that, and it is going to affect the economy, but I think it will bring house prices down. Not yet, probably I think within about a year and a half we'll see London prices maybe dropping a few percent.
Right, but obviously it might have political consequences as well. Richard Sorsky, thank you very much indeed for joining us.
Thank you very much.
Thank you very much.